All right, so what's going on, ladies and gentlemen, and welcome back to another level of FXC Academy. It's your host, Tamir Thomas, and today what I got for you is level 2. We're going to be talking about technical analysis. And yeah, this level right here is where the application comes and the the will to get good at this and learn this really is shown in level 2. We get straight to it. So, before we get into the great stuff around technical analysis, please do me a great favor and leave me a like. Subscribe if you're new. Share with your aspiring trading friends, and let's get straight into it. Once again, we are talking about technical analysis, and let's talk about what technical analysis is. Technical analysis is essentially a type of analysis where you apply market tools and indicators onto price to predict future price action. So, when you are applying technical analysis, you are on tradingview.com. You are applying these tools at the bottom, the types of technical tools and indicators on that chart, and you are making sense of the market. You are using these tools, the raw market structure, the supply and demand zones, the Fibonacci retracement, and the 66 weighted moving average to help you predict future price and essentially stay on trend. That's really the main thing. It's staying on trend. You want to make sure that you use these tools to put you in the right position to make some profit in the market. And of course, it all starts with the raw market structure. So the raw market structure is the first one up there for a reason. That is number one. So it is the simple pattern that the market follows. And if you remember from level 1, that pattern is consistent of either higher highs and higher lows in the uptrending market or lower lows and lower highs in the downtrending market. Okay. Moving on from that, we have supply and demand zones. These are areas of high buying and selling power. So supply is at highs. Supply will be formed at highs. And it'll be shown by multiple wicks, multiple rejections, multiple retests. And, if you see that, if you remember from level 1, if you see a lot of rejection, it's telling you that price doesn't want to go in that favor, hence the pressure that we're seeing in both of these supply and demand zones. The Fibonacci retracement, this is a great tool right here. It's really good. And this measures the pullbacks and retracements in the market structure. So you apply the Fibonacci retracement with market structure. And the simplest way I can explain this for you guys right now is that if you are in a bullish market and prices making higher highs and higher lows, you could use this Fibonacci from the higher low point, extend it to the new higher high, and then you could then measure that next retracement to the future higher low point. And that's it. That is it. Don't think about it too much. That's what it is. It's helping you stay on trend. And that's what you want. And of course, if it's sellers, you would start the fib at the lower high point, the previous lower high, end it at that new lower low that price found. And the Fibonacci tool will measure the retracement to where a next lower high point can be. Okay, and moving on, because we'll talk about all this a little more, but we're going to talk about the 66 weighted moving average. And this is a lagging indicator, mind you, lagging, that follows price action and tells you the weighted average direction of traders in the market. It's the last for a reason as well. That's kind of like, all those 3 principles come before the weighted moving average at times. I think the moving average is more so for adding more confidence in your trade and giving you a visual representation of what you want to see, and then also giving you a clue of maybe when you should get out the market, And that's a great way to use it, but we'll talk about it. because we have videos for all of this stuff. So right now, this is raw market structure. Once again, you're on TradingView and you're using the trendline tool, and then you're going to lock the trendline tool. The video is going to play showing you exactly what I'm doing. Trendline tool, make sure and keep drawing mode. And once again, this is where the practice and the everything comes from. So as you see, I am drawing out some raw market structure here. And that's what I want you to do. You want to draw out the market's pure structure. And as you're doing this, you should clearly see the uptrending market and the downtrending market that price makes. Right here, we're seeing some bullish market structure. So if you follow my cursor, this is a higher low. Price made a higher high. Price came down from the higher low point, higher high point, higher low point, higher high point. Price is increasing. That's how price increases. Now, when the higher low points gets broken like this and price prints lower than that higher low point that we just marked off, this is a lower low. So that's signals of bearish market structure. But because this is gold, prices continue going up, made a new higher high, higher low point, and bullish volume was continuing. Here, I tried to find you guys a decent retracement to the downside, or even just, some lower high points that you will see in a bearish or downtrending market. This is a high. Price pushed past a new lower low because it broke past those higher lows back there. Lower high point, these are sellers. Lower high point, sellers. Lower high, higher low point. That's still a higher low point. See, it's like some tricky structure. But this is stuff you guys have to practice and understand. Lower high point, price got pushed lower, but then found a support with this blue candle here. Push price up a little bit. Lower high point, seller says, nope, we're still going. Lower low because it was lower than that previous low. Price comes up. That's a higher high point because it's higher than that lower high there. Then you got those higher low points. See, like when you use this tool, you could see structure. Like you could see the bullish structure happening. And that's what you want, I'm gonna pause the video, and it's crazy. We're kind of watching a video within the video. But the true question is, where would you buy or sell at? Ask yourself that. But moving on, we are now talking about supply and demand zones, and I'm gonna let the video play out while I'm talking. So we're still in TradingView, and you could keep your same structure if you would like to on your chart. You're going to use the rectangle tool and then lock it. You are going to look for high areas of bullish and bearish pressure. So what I just labeled out is the bullish and bearish pressure I'm seeing. And I'm kind of using the market structure that we applied to help guide me just a little bit. Of course, it's not exactly perfect, but you could kind of see how price is bouncing in between these supply and demand zones. I mean, definitely right here, price is definitely bouncing there. At the top, that's supply. So once again, like I mentioned at the start of the video, supply is at the top. That's selling pressure, and then demand's at the bottom. That's where you buy at. And, the same thing up here. Price broke above, made a new supply, came down, used the same area of supply as demand once it broke above. That's usually called a break and retest. Price came up, tested the same area of resistance. It did make a higher high point, but I mean, it's still selling pressure here. So price reacted. Higher low point. Whoop. It's kind of crazy. We're watching a video inside of a video. But, yeah, supply turned demand. We already went over that, Ty. Like I said, more supply. And then the demand, because this is new demand, and that is where I was just about to go to. This is now demand. Buying pressure back there. What we got here? Supply turned demand. Yep. This supply at the top got turned demand once it broke above. And our new supply would be that high. So I'm going to pause because I'm moving quick. But price came back down to the demand, broke above our previous supply. Used the previous supply as demand again, as shown in this example here. And now we have a new supply up here that price could either test or just break above. Yeah, you guys definitely should have got a good understanding of that. I mean, supply and demand is not complicated. And I guess I would ask you guys the same question. Where would you buy or sell at? Hey guys, and this is going to wrap up part 1 of our level 2 lesson, technical analysis. Level 2 is quite lengthy, and I decided to just break this up into 2 separate videos just for the betterment of your viewing and just for the content and information you guys are learning. So look forward to part 2 of technical analysis, where we're going to be talking about the next 2 technical tools that I use. And yeah, leave a like on this video, subscribe if you are new, and I'll see you guys in part 2 of level 2. See ya.